In today's video, I'm going to be going over how to depreciate an asset and enter in an asset in QuickBooks Online. Before I get into that, for those who don't know me, my name is Mike Braun. I'm a bookkeeper and accountant that helps business owners in the state of Pennsylvania with their bookkeeping and taxes, generally in the state of Pennsylvania. So, without further ado, I'm just going to share my screen, but I must say, please bear with me today. I've been having issues with QuickBooks, so I'm not sure if it's 100% with this new software stuff they got going on, but I've been having issues, so please bear with me. The very first thing that I want to show you real quick is going to be the balance sheet report, because this is where you're going to be seeing the actual asset that we're going to enter into QuickBooks Online. This is where you're really going to see it. So as you can see, they actually already have a fixed asset entered in. In this case, they have a truck, and they have the original cost of that truck is the $13,495. Instead, today we're going to enter in a piece of equipment, I think is what we're probably going to end up doing, and we'll go from there. So, but as you can see, this is like where it's going to show up on, if you were to run a report, this is where it's going to be. So first thing we got to do is we're going to go to the chart of accounts, and we are going to create a couple different accounts here, but I'll kind of start with just the most important one in my opinion, is what we're going to name this asset. So I'm just going to call it equipment, and for the account type, this is going to be a fixed asset. I don't know why I missed that before. And as you can see, it just pulls up down here the only fixed assets that they already have listed. So we're just going to look for equipment. There should be like one, machinery and equipment. We're just going to select that, and we're going to go off of that. So what I'd recommend doing is not making this a sub account, just having it as a regular account. Really, there's no point in making it a sub account or anything like that. And we're just going to click save. And that's going to be where we're going to enter in the actual value of the equipment. When we first purchased it, the price of what that equipment was. And the other account we're going to create while we're here is equipment, if I can spell equipment right, and we're going to put A/D after it. And this is going to represent, so again, fixed asset. The A/D is actually going to represent accumulated depreciation. So in this case, we're just going to click accumulated depreciation right there. And this one, you're actually going to make a sub account, and you're going to put it under equipment. And it'll make more sense when I'm actually making the journal entry to enter in this asset in the QuickBooks. It'll make a lot of sense once you see it there. So I'm just going to save it now, and we're going to make a journal entry. But before I make that journal entry, I just want to share my screen real quick. I've already kind of created a depreciation schedule for what this asset is going to look like. So I'll recommend Calculator Soup. Calculator Soup is what I use for depreciation calculators and creating a depreciation schedule. It works great for everything I need. I'm not trying to be I'm not an affiliate. I don't make any sort of money from this, but I highly recommend it. First off, if you're an accounting owner and you need something to create a depreciation schedule, or if you're just a solo business owner doing your own taxes, I highly recommend Calculator Soup. But in the meantime, so this is what we purchased the asset for. In this case, it's the $15,000. The depreciation expense for 2025, as we can see here, is $3,000, and the accumulated depreciation is $3,000 as well. So the end of the year book value is $12,000. Okay, so we're just going to go back to QuickBooks, and we're going to enter in. See, this is what I've been dealing with all day today. This crap here. I don't know what's going on in QuickBooks, but you need to fix it. It's annoying. But we're going to create a journal entry. So you're going to click New Journal Entry. And once here, we're going to, first off, for the journal date, I recommend picking the date that you purchased the truck, since that, or the piece of equipment. So let's just say we bought it June 16th of 2025, and you can even change the journal entry number to just say purchased equipment. I'm just going to abbreviate that. So we're going to search up our account that we created. So in this case, it's just equipment, fixed asset. And you're going to enter it in as a debit in this case. So you're going to debit the equipment for $15,000, which is how much we purchased it for. And the credit account is going to be the opening balance equity in this case. So, and if you want, I highly recommend always entering in the description just to make your life easier, or if someone else's life easier, if they have to review this later on, you can just put the date too on June. If you got attachments or anything backup, you can always add that too. In this case, I'm just going to click Save and New, since we've kind of already, this is the original entry to enter in the equipment that we bought. So this is basically just showing that we purchased this equipment on June 16, 2025, and we're entering that purchase in. So I'm going to click Save and New. And then this one is going to be the actual booking of depreciation. So this is actually an adjusted journal entry. I'm not 100% sure why it's not giving me that option today, but it's QuickBooks. Sometimes it's one of those days, I guess, within QuickBooks. First things first, I already did this already, but you're going to enter in December 31st, 2025, since this is a year-end adjustment journal entry. So you do this at the end of the year. And I'm just going to put the journal number, enter depreciation 25, just to let us know that we're entering in depreciation for the year 2025. So the account in this case is going to be the accumulated depreciation account. That's going to be the first account that we really need. So in this case, I'm going to enter in equipment, and it's going to see the A/D, and we're going to enter in, so this comes back to the depreciation schedule, the 3,000. That's what we're entering in there, and it does, of course, it does it again. I don't know what's going on. I really don't know what's going on, but it's driving me nuts. Okay, and of course it doesn't. It resets everything. Okay, let me just type all that back in. And we're going to enter in the credit column 3,000 to represent the accumulated depreciation that we have, and then the other column or in the other line, we're going to enter in depreciation, and this is going to show as other expense. So I don't know why they have a depreciation account for the truck. Just make sure it's the other expense account. That's what you're really looking for. It has to be the expense account. Generally, QuickBooks already has one created. If not, I'll just show you how to do that real quick. You're just going to call it depreciation. You can call it expense just to make sure you know that it's a different, not just depreciation. And then I recommend going to other expense. And then you should see in the detail type, you'll see depreciation, and then you can just enter that in. In this case, they've already got an account. They just didn't call it exactly what I would call it. So for the description, we're just going to call it enter depreciation in for 2025. And looks good to me. We're just going to click Save and Close. And now we're going to run our balance sheet report for the year 2025. And if we did everything right, it should match what we have as the year-end value. And that's really what we're looking for in this case. So for some reason, it ran it to year-to-date. Let me just do that all the way to the end of the year. And as we can see, the equipment is the 15,000. The equipment A/D is the accumulated depreciation, which is 3,000. And from what we had on the depreciation calculator, the book year value end is 12,000. So as we can see, it matches. So that's really what we're looking for. We want it to match with the end of the year. And then next year, at the end of the year, you'd come in and you'd enter the same journal entry except you do it for 2026. So in this case, you would enter in the 4,800 as the depreciation expense, and you debit the depreciation expense, and you'd credit the accumulated depreciation account for equipment, that 4,800, and that should give you accumulated depreciation of 7,800 and the book value year end at 7,200, and so on and so forth. So that's really what you're looking for when it comes to entering in depreciation. Like I said, I highly recommend having a schedule, just because it makes your life a lot easier. And it also gives you kind of something to just reference, fact check, because you are technically supposed to reconcile these accounts against something. You can reconcile it against that, so it makes your life a whole lot easier to just have something to reference. And I highly recommend Calculator Soup. I'll put it in the description below. I'll link it down below. Like I said, I don't make any sort of affiliate income or anything like that. It's completely free. I just love the tool so much, and I use it in my own practice, so I feel like it's beneficial for you as a business owner, or if you're an accountant or anything like that. I just really wanted to share that with you guys. So that kind of brings a wrap to the end of this video. If you have any questions, comments, any concerns, please feel free to put anything down in the comment section down below. I'll be happy to respond. And be sure to subscribe, like the video, give it a thumbs up, and I will be sure to see you in the next video. So have a good day, everyone. Peace out.